The stock should be up more. I mean, it should be up 20%, 25% easily. I mean, we can dial in. Now we know the value of the assets. We don't totally know the value of all the liabilities yet with long-term care, but I think we're getting close.
Why do you think it's not up more then?
People are skeptical, right? I mean, this is GE. They've done everything to trip over themselves for really 2 years now. I think it's going to take people time to sharpen the pencils. I mean, it's complicated. There's still a lot of moving parts in this thing. I just got off the phone with a portfolio manager who's covered the stock for 20 years, and he was confused still. So, I mean, it just is what it is. It's a complicated story. It's going to get a lot better in a year and a half when these spins are done, though.
Justin, as far as the portfolio composition and the big decisions they made, is this how you would have done it?
Yes, thank you. This announced strategic update this morning is in line with what I had envisioned as a strategic path for the company. The decision to separate healthcare by way of an IPO and subsequent spin of the remainder of the company not only raises much needed cash to delever the balance sheet, but it surfaces asset value and further simplifies the business. And I agree with Scott that the stock should be up more and will probably go up more as people gain confidence on all the moving parts and the execution therein.
Scott, how much longer do you see this period lasting? If you feel like the stock should be up that much, is it another 6 months? Is it another 12 months before we see them kind of GE get out of this defensive crouch and start to get more aggressive again?
I think it grinds higher over the next year. But honestly, I mean, there's people that analyze this stuff for a living. All the ARBs out there are going to be in buying this thing tomorrow, just saying that if the fundamental analysts can't figure it out, they'll figure it out. I mean, the value's there. The stated value of each of the assets are there. It's not that complicated. It's worth a heck of a lot more.
How much of that is contingent on power and on energy doing what it's done?
It's not contingent at all. I mean, power's at 6% margin right now. I'm not sure it can get much worse. I guess it could a little bit, but that should be a 15% margin business. And Baker Hughes is a $33 stock, probably should be a $40 stock. So I just don't see a lot of downside in any of the scenarios we look at now.
Justin, how should we be thinking about GE Capital? We got comments on it from Flannery here on set just a short while ago. The fact that they're looking to streamline that, funding $3 billion next year, but certainly that has been, until this point, very much an overhang on the stock and on the story in terms of how to think about value and liabilities.
Sure. GE Capital remains a concern for investors. You know, we think that with the $3 billion capital contribution, GE Capital is better capitalized to reach the credit metrics that the rating agencies want sooner, alongside having capital a capital cushion should GE find an attractive option to reduce or eliminate its long-term care liabilities. I think there are a couple things that remain to be, clarified on GE Capital, but I think we are reaching the end of that uncertainty process. And as we reach the end of the uncertainty process, the concern about a negative hold there will evaporate and, de-risk the stock materially.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.